Welcome back, everyone. Let's review what the market did January 7, 2022. Let's start off with the S&P 500. You're looking at the daily chart of the S&P 500. What's wrong with this chart? Nothing. Still in an uptrend. Crash? Really? A crash? Does it look like a crash? I hear lots of people talking about a crash. I'm sure they say the same thing here. They said it here. They said it here. And now we're here. And every single time it just keeps getting moving higher. When the crash happens, you don't even know until it actually happens. Anyways, let's go back to analysis. Um, Friday was a very choppy day. It was just bouncing up and down between those two levels, the 20-day moving average and the 50. It actually dipped below the 50-day moving average and quickly moved above it. Now it closed right on it. So for tomorrow or for Monday, next trading session, I would expect that to act as support, the 50-day moving average and today's low. And for resistance, it will be the 20-day moving average. Anything here in between, I think it's going to be very choppy and I don't want to be part of it. Let's take a look at the hourly chart. The hourly chart, you can more clearly see those levels. Support it will be between 4660 and 4672 roughly. So that's like a 10-point zone right here that will be the last very important support for the S&P 500. If it dips below that, it can get very ugly. It can really sell off very aggressively. Anything here in between, I think is going to be very choppy. Whether you're bull or a bear, I think is very unpredictable prices here, unpredictable outcomes. Me interested on the upside. If it pushes above 47, say 47.20, 47.25, then I will be looking for an entry point. The other point where I would consider buying is if we spend a little more time around this area, around the 50, around here, and then it pushes higher, I might be interested to buy close to that 50-day moving average and play the bounce. If it dips below this level here, I really don't think I'm going to short it. Why? Because I think it sold off too much too fast, and I think high probability will be the upside. I will be watching very closely this zone on Monday. Let's now take a look at the Nasdaq 100. Nasdaq 100 dipped below the 100-day moving average as we expected to find support between that level and 15,500, which has been, as mentioned before, it's been acting as support many times before, well, twice at least. And now it bounced off that level. Now it's trapped between that level and the 100-day moving average. So levels that I'll be watching on Monday very closely will be this level 15,700 and today's low. Anything in between will be very choppy and I do not want to be part of it. If it pushes above this level, I will be looking for an entry point. Below this level, I will be doing the same thing, but I think I'm more likely to go long than short, especially after this big sell off. I think has a higher probability of a nice bounce off this level. Off this level versus short from here. Look at the hourly chart and see the action for last session. It was here. It found support here, bounced, and then it just basically is consolidating up and down between 15,700 and 15,550. Like I said, anything in between will be very choppy. Pushes above this level, consider long. Below this level, short. I think that going long will have a bigger reward. I will be watching these levels very closely on Monday. Interesting pattern here for the last couple of weeks. So horseshoe. See that? Interesting. Now take a look at the Dow Jones trend. What does it look like? Up or down? Uptrend, not a crash. Nothing has changed since the previous session. It is still stuck between that level, 36,200 and 36,600. Anything in between will be very choppy. Is below these short-term moving averages. That will be heavy, strong resistance if it tries to push higher. On the way down, support will be that line right here, where you see the green box, green zone. This will be the next level, the 20-day moving average. And if we dip lower, expect that to be the 50-day moving average to act as strong support. But chart looks strong. Very strong uptrend. Let's now take a look at the Philadelphia Semiconductor Index. This one had a big sell-off today, Friday, compared to the previous indices. This one just found lots of resistance, trying to push higher, dipped very aggressively down, and it found support. Oh, it didn't even find support. It's just trading close right below the 50-day moving average. So for the next trading session, I think that level will be very important. If it doesn't hold today's or Friday's low, that low right there, I think it can quickly sell off, and it will be very difficult to recover in the short term, as it will be under all these moving averages, and these are quickly declining too, the 5 and the 10. Anything between these zones right here, expect very choppy. I don't want to be part of it. Pushes above that, consider going long. Down here below this level, I will consider going short. But as the previous indices, I think it's more likely or more rewarding if I play the bounce versus the dip lower. This is a big range. Today's candle, big range. So I would expect, or I would not be interested in buying, shorting, or going long until it consolidates a little. Let's now take a look at small caps IWM ETF. This one got very choppy 3 days ago after this big drop, and now is between not between this big support and all these moving averages. So it will be very choppy. The closest resistance will be up here, which has been the high for the last couple of days. I don't really see any major support anywhere until you get down to 210, 212, which has been very strong support for the last few months. I mean, this ETF has been stuck. Russell 2000 has been stuck in this range for months. Tried to break out and failed, and now is in this range and is very choppy. Remember that pattern we talked about last time? It looked like an inverted head and shoulders. Well, it's still in play. You look at the hourly chart. Remember that pattern? This pattern here, the inverted head and shoulders, we thought it could break out here, but it didn't. So I was watching this level very closely, a push above 228, 226, but it didn't happen. Anyways, has been my analysis for market close of January 7, 2022. Thank you for watching and good luck trading on Monday.